What's up, everybody? It's the Swinging Bull and Mr. SLP, and today we wanted to talk about our top growth stock picks. Let's go ahead and dive right in. How you doing today, Lee? On a Friday,
I'm doing
ready
good,
to
man.
end the week?
I'm doing good. It's another week notched up in the market, huh? We're coming up to the power hour shortly. So I'm doing good, man. What do you got for us? What are you looking at?
Yeah, so the first one is IART. Let me go ahead and go there. And this company, it's a healthcare company, and they're involved in like surgical devices and surgical reconstruction and nerve repair, things of that nature. And we know healthcare is a pretty good industry to kind of have your money as well. So I was looking at the daily chart on this one, and I think it's in a fantastic position to maybe take a starter position for a growth stock portion of my portfolio. We had a nice little bounce this week where it hit a low of 46.46. If we kind of go back in time here, we did have another area of demand, which was in the 40s, which was kind of a little bit below where it bounced earlier this week. So, as far as the fundamentals go, it's got great PE ratio. The EPS is positive, 72 million float, so it's not an astronomical float. As far as the financials go, on an annual basis, you can see their revenue has gone up year over year since last year, that 1.5 billion. And also their net income has, if you look at the chart, their net income has blasted off recently as well, compared to 2019, where they had 50 million net income. Now they're up to 169 million net income. So major increase in net income, and total revenue has also increased. Their balance sheet, total assets 3.7 billion, and total liabilities only 2.10 billion. So their debt to asset is it's around 55%, well below the 100% we'd like it to be under. Did you have any thoughts on this, Lee? Just kind of from looking at the chart, but I'm really liking this one for a growth stock long term here.
Yeah, so what we're looking for in a growth stock, right? We're ultimately looking for profit margins, rise in profit margins, strong sale growth, and just manageable levels. Like they're manageable, they're managing their debt very well, and like you say, just growing in income. They have a strong balance sheet. And you can see in the chart that it's steadily going up over the years.
Right.
So for this, I think that of course we had a rough year just in general. So we see some downside in most stocks right now, right? But if you look at all the fundamental side of it, everything's increasing, and that's what you want to see. So I do love where it's sitting, and there's going to be a lot of opportunity just like this. I mean, okay, the chart showing it's down in this $40 range. The high was $77 or $75. But it's most stocks are like this in the past 6 months. They've been coming down to pretty much COVID levels. So I think it's a great area to load some stocks on. And I like this one too, like you say, in the 40, was that $49 or $45 range is a good area to load up. And then you want to hold it long term, right? Because it's growing, and the actual stock price should be growing over the years too.
Yeah, exactly, and that's going to happen, and the financial data tells us that when we're seeing their revenue increasing, when we're seeing their net income increasing, that shows us right there their growth. There's definitely some growth there, and this I did find this on a screener I set up for growth stocks in particular. So this one popped out on me not only because of the chart, but of course the fantastic financials and great fundamentals, and really like it. So IART, that's my pick for top.
Is there like a target you want for that? Is there you gonna put a price target on that, or are you just looking for like a percentage per year kind of to get back on this one? What are you looking at?
My price targets I'm just going to keep it simple. The first one would probably be this 50 moving average on the daily chart here. So that's around $53. So, that's going to get us a 10% gain right there in the short term. So, you can see right here, almost 3 white soldiers are forming here. So definitely, if we can get above this 20 moving average on the daily, my price target would probably be around $53. Long term, I would like it to see it retrace to the 200 moving average, and that's going to give us around $59 right there. And it
so
does
like a good like 20%, like a good 15-20% return, maybe in a year or something, a year or so.
Yeah, and then we can always raise our stops up as it's continuing to go up. So really like that one. IART. What's the pick that you have, Lee?
I'm gonna share my screen. I'm gonna
let's do that
right here. Here we go, guys. My pick is ROKU, right? So I was looking through different growth screeners, and ROKU came across that screener. And I know it's been beaten down to a pulp in the past year, just like all the other tech kind of companies, right?
Right.
So they lost like 3/4 of their value actually in this past year, just because of how the market came down.
Yeah.
So this company, we all know what ROKU does. It's a streaming platform, right? And it's a very popular streaming platform on most TVs now. So the thing is, with this stock came down 3/4 from its all-time high, but the revenue, this is the big shocker. The revenue, it went from 512 million in 2017 to 2.76 billion at the end of December, this past December. So that's an annual rate, compound annual rate growth of 40%. And that's, for me, that's something significant to look for. And you find this stock and it's going to be, I think, undervalued at this price. In our Discord, even I said like 2 days ago, I said, look, if the market keeps rallying, buy ROKU calls, like for a day trade, even for a swing. And we're up since I announced that, I think 6%, I think 7% since then. But the company has just announced a partnership with Walmart. And this partnership allows viewers to buy items from Walmart while streaming on the ROKU devices. I think that's a huge partnership that may work out. I mean, it may take a little time to get it kind of configured right. But I think that could be a huge revenue for that ROKU. I think that could be really big revenue, generate that revenue there by also putting ads on there, right? So they're making money by doing ads, and that will generate revenue too. So that's a big partnership with Walmart. And there was a few other analysts that I read. About 30 minutes ago, I was reading an analyst review from Neiman, and she was saying that the streaming wars will be won by ad-driven business models. And ROKU is 100% ad-driven streaming. So she thinks it's one of the biggest companies that will probably win this war in streaming. So I like to see what other analysts are saying. So, I like at this price between 65 and maybe 68. I think that will be a good level to buy. We can see right here on my chart that we have a double bottom form here at 62. So we came down to 62 after earnings. So we gapped down. We actually filled that gap up within like 2 weeks. So we went from 62 to 85. And then we came back down just a few days ago to retest that 62 range again, which we held perfectly right there. And then we bounced right off. So for me, I believe anywhere between like 65, 68, build a position, even if it comes down for a triple bottom at 62, even better. But I think in this range, it's a safe buying zone between like 62 and 68. I think this area right here is great buying zone. And then, I would obviously aim, this is a resistance trend line that I drew on from March of this year till now. So I think that the first target I would aim for from here would be at the EMA 50. So probably around $78 would be my first target. And then I would look for a break of this trend line and then aim for the mid 90s to even the $100 range for a second target.
That's what I think. Yep.
What do you think about this one?
I mean, I was just, while you were talking, I was going over a lot of their financials, taking a deep dive there. Debt to asset, only 32%, super low there. 1.3 billion in liabilities, but they have over 4 billion in assets.
Absolutely.
Pretty lopsided there to the asset side, which is, we like to see that as well.
So you see right here, right, on this graph that I'm showing, the increase in assets. So, you know, we're increasing assets. Liability is increasing, but it's not increasing as much as the assets. So
and it's way lower than the assets. So there's tons of room there. Yeah.
Absolutely. There's tons of room there. They can easily pay off their debts if they close business today. So that's a good, the debt to asset ratio is great. Income, you can see on this chart, the income
revenue
is huge.
Yeah.
You know, in the past we were negative and now we're positive, net positive.
Look at the
so
bounce
this is a
back.
great growth.
Look at the bounce back from last year. I mean, what was it, over 1,000% year-over-year revenue increase that just happened? I mean, that's a shocking, you know, stat there. You know, for a good shocking stat. And you know, just, you know, if you look at the total revenue, you know, they went, I think you mentioned this earlier, but from 500 million revenue in 2017, and now they're bringing in 2.7 billion in revenue. I think that's fantastic. I like ROKU as a growth stock. I like them long term. They're not going anywhere. The ad revenue business as a whole generates billions of dollars, you know, per year, and you know, they're heavy into that source of revenue, and they're going to be around for a while. And looking at the chart, I mean, the amount of upside.
You can look at the weekly chart. Look at the weekly chart, guys. If you look at the weekly, and you can see we're up here, we double topped in the $490 range, and we came all the way down to $62 was the low, recent low. But the opportunity of this company, and obviously the growth that they've been building in the past couple of years, this is definitely an undervalued stock in my book, you know, what my opinion. And I think, like, I mean, we're down to these levels right here in 2019. We came pretty much down to that level. So I think, like, looking at that potential, man, this thing can go. And I'm just saying the lower end of my targets could be, you know, 79 first target, second target could be 95, even like $105. We can go as high as, you know, 120, 130. But I'm just, you know, giving a cautious target there. So I think there's a lot of upside potential.
Yeah, no, I mean, I totally agree with that. And kind of to elaborate what you were saying, I mean, ROKU's sitting at about $71 right now per share. The last time they were in that area, like you said, was in 2019. I did want to point out that their total revenue for 2019 was around 1.1 billion when they were around $71 a share. And the amount of revenue they had last year was 2.7 billion. So more than twice the revenue that they have coming in the last time that they were at this level.
It's a perfect deal. I mean, you can slap in a stop loss just below that $62 if you would like. I mean, if you want to build a position, you can, but just slap a stop right below that double bottom, because if it breaks, then we're probably going to see a lot lower from there. But there's always have a plan to get in, how to build your position long term, and then slap in that stop loss to protect your downside.
Absolutely. It's fantastic. So just to recap, top growth stock picks from myself, Bull, and Mr. SLP is IART, and then we have ROKU, ROKU. So I hope you guys enjoyed this video and gave you some good ideas there. Hope everyone has a great weekend, and we'll see you next time.
Thank you, guys.